What do you need to know about digital currency, including crypto? That's the topic that we're going to address today on Flourish-Meant. I'm your host, Tina Yeager, and today I have a very experienced and distinguished guest with me. His name is Christian Briggs, and he is CEO of Hard Asset Management, and he's got 20 years of experience covering all the topics that you could benefit from in your finances. So welcome, Christian. I am delighted to have you on Flourish-Meant today, and I can't wait to dive into this topic and have the whole audience benefit from your expertise.
Thank you so much for having me. It's a great topic, crypto and digital currencies. That is probably one of the most asked questions, topic-wise anyway, category that I probably get over the last couple, 3 years. Where do I even start? I mean, it's such a wonderful thing to talk about, but yet the good and the bad. Should we start with the good or should we start a little bit with the bad?
Well, what is your take on cryptocurrency and digital currencies? Is it good primarily, or is it something we should be a little cautious about?
You remember back in about 1950, the TV was kind of raging and everybody loved watching their favorite programs. You know why they called them programs? Okay, because Hollywood was infiltrated with a lot of money from US government to be able to program people to sit around the TV and be entertained. Some of it was actually quite good. I Love Lucy and the Honeymooners, great stuff. Of course, only in reruns did I see them, not firsthand. But let me tell you this. Let me tell you about crypto. So crypto is a very simple system. It is a authentication of a token that's generated in an algorithm between a buyer and a seller. It's called point A, point B on a decentralized system. It basically takes a perception of value and creates a reality to it. In other words, if you turn the power off, it doesn't really exist. It's kind of like in the cloud. People used to say, well, what's in the cloud? Well, everything is. Which cloud? All of them. Okay, great. So crypto allows you to be autonomous and allows the free trade of a token, which again, it goes back to, does it have value? But the good news is it's on a decentralized system. There was an old saying in government, once we centralize power, we can control the masses, a handful of people. So when you centralize something, you put that product or service, or in this case, a little token, a little piece of computer code into a centralized system of control. In other words, you cannot leave whatever the mechanism is that you're trading from, let's call it an arena. Okay, there's no exits. Only exits are available when the people that are running the arena can allow you to go and do something. That's called centralized. Decentralized allows the free trade across borders and everywhere, where you and I can contract and agree on a buying or selling something. That's what crypto is. It's a decentralized ability to make payments autonomous and free trade. In other words, it's capitalism. So let's talk about digital currencies for a second and the sense of what they are. They're not crypto. Digital currencies are a centralized system that the governments are putting into place in order to replace cash and checks. Now, Venmo is one of the primary apps we use to buy and sell products and services with the digitalization of a token. The tokens are obviously dollars that are in your account. But what we did was, crypto was a way for the governments around the world to program people to remove cash and checks from everyday life. So what crypto did was it programmed us, like TV did in the 50s. It programmed us to pick up this phone right here and to say, I no longer need to go to the bank. I no longer need to go to an ATM. I can now pay for things very simply with digital currency, because that's what it is. You're not touching anything other than your phone. Boom, 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 there it goes. So it was programmed. And I've always said before, and now it's starting to come out, Trump knows this to be true, as well as other people in the intelligence community. Bitcoin and all of the cryptos of similar nature, not all of them, because some are software companies, but Bitcoin was a primary way of which various governments got together, introduced it during Obama's first term, launched it because it was a very complex system. And they were able to program people to accept something of no value that lives in a abyss, if you will, especially if the power turns off, it doesn't exist, to accept that as a means to buy and sell goods, trade services, at the same time, find value in it. So the problem is crypto programmed us not to have to use cash. Program is to make an easy peer-to-peer purchase. The only difference is now the government's coming in saying, oh, we're doing digital currencies. That's a centralized system. You'll need permission to be able to buy certain goods and services. So that's what we're facing.
To me, it feels like we're stepping into a virtual reality where we don't actually hold anything of value. We just have, as if you were in a video game, these tokens to pay for things. Once that reality, that virtual reality starts to fail in some way, then we have nothing left. What is the solution to help people? Should we trust those digital currencies and cryptocurrencies? Or should we diversify and do some of that and some of the tangible types of wealth that we used to many years ago? What is your advice when we're looking at these things?
Great question. If you look at gold and silver in the last 3 years, gold has doubled, silver pretty much has doubled, right near there. And what the metals do, what the precious metals do, is they're a barometer. They're of things to come. And what I've noticed is, if you want to go statistically here, in the last decade, take South America, for example, since you make such a good question and a good point, 40% from 0 to 40% in less than 10 years. South America now uses gold for 40%. Okay, 40% of their transactions are in gold. In just 10 years, it went from 0 to 40%. And the reason why is that if you look at South American paper currencies, they're always in flux. They get devalued, they have mass inflation, they get eliminated. Oh, there's a new currency on Monday from Friday. Oh, it's been devalued 50%. If you look at the dollar, we're exactly the same. From 2000 through the end of 24, the dollar has lost about 90% of its buying power. In some cases, it might even be a bit more. It depends on where you live, especially on housing. So when you think about that, and gold's gone up tenfold in the last 20, 25 years, you'll see there that the wealthiest people in the world have always made gold a big part of their investment portfolio for capital appreciation, but that's not really what it is. It's wealth preservation. It's preserving the wealth they had by buying gold and getting rid of cash. And they knew this was coming. They knew digital currency was coming. And so now all of a sudden you see here people buying more precious metals, hard assets in general, rare cars, rare coins, rare art. It's all been doing quite well the last 10, 15 years. But what's interesting is the shift by how many people in government are buying gold. Look at the central banks around the world. The top 10 central banks like China, Russia, Singapore, Poland, and so forth have bought more gold in the last 10 to 12 years than in the last 30 years combined. And some of the countries that had never bought gold in the last decade have started piling up on it because the concern is how much further can, one, currencies go down because we have inflation, okay? We have taxation, which makes devaluation a certainty within currencies, especially when the debt. So cryptocurrency has been kind of a hedge for people to look at from a wealth preservation. But what's interesting about it is how many people are going back to gold who might have bought crypto or did buy crypto, because at the end of the day, you want your assets at your fingertips. You're not reliant on a power, a computer, a phone, or an app. Gold, you can get cash for that anywhere. But the beautiful thing about gold is it hedges devaluations of paper currencies, which is what you're experiencing now, especially with bad policies that we've had the last 4 years. Fiscal policy has been terrible.
Do you forecast a shift from all of our transactions going in hard assets to crypto and digital currencies in the very near future?
Yeah, so we've already started transitioning. The percentage of people who have already transacted in digital, in 2023, it was around 27% of all transactions in the US were digital based. This last year, about 45%. So we're escalating quick. Another 2 years, we'll be at that 100% mark. So cash and checks or anything of that nature will become almost secondary thought when it comes to buying or selling. However, let me give you some stats here. It's very interesting. If you look at the US dollar, it's still the number one transacted currency every day. As a currency, it's about 49.5% of every daily transaction is used dollars globally. That could be commodities, oil, gas, whatever. However, this is what's interesting. It used to be the number one reserve asset. It's not. The number one reserve asset is the euro. Number 2 is gold. Gold used to be number 12. Then it went to 10. Now it's at 2. If the current value of gold continues and the current buying of that gold continues, not doesn't have to be marginally more gold buying, just the amount of gold that they bought in the last several years, if that was just to continue as a flat line, we would basically have gold as being the largest reserve currency and asset within 2 to 3 years ever. It would be the number one. And in order for us to transition to full digital currency, we're going to have to backstop it with something. We left the gold standard, as you know, on August 15th of 71. Nixon had to remove the gold to back every dollar for dollar because he needed to expand our deficit, well, our budgets turned into a deficit because the recession was coming on in 72. He wanted to get elected. So his re-election basically said to come up with a new story, hey, I've got to increase the ability to influx cash into the economy. Okay, sounds great. And yes, he got reelected. But you know what that did? That caused 15% interest rates, 20% inflation by the mid to late 70s. Poor Carter inherited a real bag of rocks there when it came to the economy. But he made it worse with his policies. Obviously, Reagan made it better. But going back, we are going to have to back our next generation currency, which will be digital. There's no question it's going to be a part of Trump's administration. He's going to have to deal with it. And he's already been on the record saying we need to back the dollar with gold. He isn't talking about the paper dollar. He's talking about central bank digital currency that will be issued by the Federal Reserve to the Treasury. Treasury will put that into society as a new form of currency. And that's how they're going to have to do it because you cannot pay the debt back. They're going to have to do it's almost like a bankruptcy bundle, right? They're going to have to deal with the debt and they're going to have to somehow bundle this thing up, get rid of it, reintroduce new monetary policy. And the only way to do that is to go digital. Only problem is you're going to have some form of devaluation on your assets if it's dollar based in order for that to be accomplished successfully. How much? 20%, 50%? The jury's out, but it's going to be something. The only good news is gold has already started hedging long before that happens. Gold will tell you what's coming 18 to 24 months before a catastrophic event. And gold has doubled in 3 years. So we know we got something bad coming in the near term.
This is fascinating. I know you have more information that people need to know. How can people stay connected with you, Christian, and hard asset management?
Okay, well, thanks for asking. For everybody out there, you can go to our website. It's BMC, Bravo Mary Charlie, Ham, Ham, bmcham.com. Feel free to call us. You can get anything there, the downloadable information on what we do and how we do it. We're one of the world's largest wholesalers of precious metals and keep one of the largest inventory of rare coins in the world, U.S., European, South American coins. We supply a lot of the dealers, their merchandise, but we sell right to the retail public. And what we've noticed, though, and this is what's really interesting, Tina, is, and I want to say this thing kind of in layman terms, the richest people in the world are buying hard asset at an unprecedented level. It started about 13, 14 months ago. And when we looked at like Berkshire Hathaway, Warren Buffett selling a big chunk of his stocks and making more liquid events for Berkshire Hathaway, they have started buying silver and gold. And in other words, they're transitioning. They're going from one asset class to the other asset class, which was equities, bonds, and real estate. Where are they going? Precious metals. And we don't know the exact number. We've heard rumors. Somewhere between $2 and $4 billion gold and silver is what Berkshire Hathaway and or some of its principals like Warren Buffett have bought. We heard Zuckerberg bought recently about $2 billion worth of gold. Jeff Bezos, Larry Ellison of Oracle. They've all loaded up in the last 13 to 15 months worth of precious metals. And the reason is it's like the old saying in any kind of investment. You can't look at just the next quarter of the year. You got to look at the next quarter century. But this is different. You got to look both the short term, midterm, long term, because we cannot pay the debt back. When you have a government who has revenues of about $5 trillion in tax receipts on the federal level, and you're spending and we're going to spend probably close to $8 trillion this year to keep the economy going. We'll probably bring in about 4.8 to 4.9 trillion in tax revenue. But we're going to need an additional 2.5 to 3 trillion in order to balance the budget. In other words, we're going to continue to add 3 to 4 trillion a year on the debt. And with escalating and current high interest rates, reshaping the amount of interest we pay on the debt that continues to roll over from the old to the new. It's a catastrophic event, and it's going to happen in the next 3 to 4 years. At some point, Trump's going to have to address the issue. It's an 8,000-pound elephant or gorilla in the room. This debt is not payable back. The math is math. People lie, math doesn't. So at the end of the day, and I'll be addressing part of this here real soon at Mar-a-Lago. This actual topic, as long with the BRICS, which is another big issue to hurt the dollar. You're going to see somebody at some point in the administration say, okay, we're addressing it. Elon did a really good job about a week ago when he said there's no way you can cut $2 trillion in federal spending over the next 3 to 4 years, because between the federal, state, and local governments, they're almost 60% of our economy now. They're spending. We're so dependent upon government spending. We need it to maintain basic infrastructure systems. Without it, if you cut $2 trillion out of that, you're cutting 10, 15% of the economy. Forget about it. You can't do it. And they know they can't do it. They're going to have to find other ways in order to bring down the spending and to bundle the debt into something. And whether it's this new digital currency or somehow they just bundle us into a prepackaged bankruptcy, it's coming, because gold doesn't do what it's doing ever unless something bad's happening. Because gold's not really an investment vehicle to make a great deal of money. It is an absolute wealth preserver. And by default, when it preserves, it does create. But its main goal is to preserve wealth, and it's done it perfectly for over 5,000 years.
I hope that all of you listening feel equipped to flourish in your finances this year. And of course, I also hope that you will come back for the next episode of Flourish-Meant.